Which are the best entry techniques a forex trader should ideally not miss out if they're literally doing this as a business? My name is Sewan Kambo Isma, again from FX Kampala. If you haven't subscribed onto our YouTube channel, please do such that you enjoy the content we happen to release. You can also visit other social media platforms of ours, that is Instagram, Facebook, TikTok, LinkedIn. Just type in FX Kampala, you'll find such amazing affirmative information. First things first, I'll start right away with what we consider or what we refer to as the break and retest. Now, whenever we're entering the market, most of the times we have what we consider or what we refer to as market structure. And we have different market structures. Like for instance, we have the trending one, and of course we also have the ranging one. But most of the times you realize that as market is actually breaking the support level, the areas of interest levels, it usually or most of the times has a tendency of coming back to gain momentum such that it can, it can gain or it can take a new course of the market. Now, you who is trading, it's not important, it's not a wise decision to always, immediately after the break of a support or a resistance that you should definitely just come in to buy and sell. No, we always respect the retest. We always expect a retest to take place. So this is a technique that a trader should bear in mind, should have in mind, that after a break, 90% of all the moves that happen in such a way have a tendency to come back, to pull back. Pulling back is that opposite move that happens in the market that works as a retest, then to push in the next move. So we call that as a break and retest. So the retest is actually a best point for our entry, regardless of which strategy a person is using. It is mandatory, it is something that is crucial, it's something that is important. So among the techniques that we shouldn't miss out when we are trading is a break and retest technique when we are trading the forex market. The other one is what we always refer to as the bounce of the support and resistance. So regardless of the strategy that you are using, you're following, you're going through, you always have to respect the bounce of the support or the bounce of the resistance. It's another technique. It doesn't matter whether you're using smart money concepts. It doesn't matter whether you're using ICT. It doesn't matter whether you're using price action. It doesn't matter whether you're using your trading news and a lot more. Always, this technique is important for an ideal forex trader to bear or to have in mind before they look forward, having their entries. So this is a good, perfect entry technique that is mandatory, that is important for you to always pay tribute and respect to when we are trading the forex market. The other one is actually what we refer to as the crossover technique. Usually when we are trading, and most importantly, with indicators that involve the aspect of line or moving lines, like for instance moving averages, like for instance Ichimoku Kinko Hayo, like for instance MACD, and so on and forth. There is always a technique of crossing over. Crossing over is an ideal technique that can always determine our entry points and exit point, rather entry and sometimes exit points. So this is a technique that is very common, that is very important for the ideal trader to bear in mind, to have in mind, even though when they are developing their own strategy. They always have, if it's something to do with the moving lines or with the moving average lines or lines, whatever, in the chart, this is something they should respect, they should always focus, they should always, respect as a technique when they are developing or when they are trading a particular market setup with any strategy that one is probably using. Then the other technique that could be probably maybe the last, it's the order block. Okay, so finding order blocks, like for instance order blocks, especially when order blocks and smart money, most of the times when we are trading, we always respect the smart money. Those are the institutions, that is the banks and the hedge funds and a lot more. We respect these. How? When we are trading, they always have a component of what? Inside information. Now, with the inside information, somewhere, somehow, they'll always dictate, they'll always prioritize a certain region, a certain zone in the market where they'll place mostly all their pending orders, meaning that whatever direction market is taking, it has to always come back and respect this order block, this particular point or zone. Therefore, when we are trading, it's important for you who has an individual or a trader that is trading to always pay attention to or identify order blocks, regardless of which strategy you are using, whether technical, fundamental, whether whatever strategy you're using. You have to respect this. It is a technique. It's an entry technique that you should always not forget when we are trading. There are quite a lot. There are, like, for instance, there is Fibonacci entry point. That's if you're focusing on probably the Fibonacci retracement levels. That is, of course, the golden ratios and a lot more. So there are quite a number, but with this video specifically today, we have decided to focus on these 5 major ones, and we will possibly create another video with the interest of time. We'll possibly create another video where we shall be elaborating more of the entry techniques that a trader should bear during at the point of development, during entry, and then during the trading itself. So these are probably some of the 5 or some of those that I've just given to you. With the interest of time, you're going to allow me to stop from here. In any case, you have any issues, don't hesitate to contact us. We'll always be in position to help you. Have a lovely day. Enjoy.